Welcome, everybody.
Hey, hey.
Work smarter where you want.
This is learning at its most fun.
Hello, everybody. My name is Austin Johnson. I am a subject matter expert and trainer here at Red Tail Technology. Thank you for joining us for another Best Practice Partner webinar. Today, I've invited my friend Larry from Totum Risk to talk about assessing client risk. We're going to be looking at how to get a more accurate assessment of client risk capacity. Larry, go ahead and take it away.
Thank you, Austin. Thank you, Red Tail, for allowing us to talk about risk, quantifying risk, using risk as a risk tool, as a prospecting tool, and as well as our partnership and integration. My name is Larry Shumbrays. I'm the CEO of Totum Risk. Just want to briefly talk about how we're better quantifying risk, and then just talk briefly about the benefits of Totum Risk compared to all the other risk tools out there. There seems like there's more and more coming to the market every day, and then give you a high-level overview, a demo of the product and integration that we have with Red Tail. The reason why we got into this space is we felt that a lot of the risk tools out there were broken or really weren't accurate. And we've all taken risk questionnaires over the course of our careers, and investors have taken these questionnaires, whether they're on paper or online. And the one thing that we found is they were all outdated. A lot of them were compliant. They were just pretty basic, static. The typical 1 + 2 = 3. They delivered a poor client experience because the questions were confusing, or they just kept asking the same questions over and over again. And they weren't really adding real value to the advisor. So we felt that there had to be a better way to add a better client experience, as well as a more compliant risk tool and accuracy to the risk tool for financial advisors, as well as a positive workflow. So when we set out, we looked at all these risk tools, and the one thing that we found on top of those other areas that I mentioned here, where they were all focused only on psychological risk preferences. And the problem we found with only focusing on risk preferences or behaviors is they change all the time, right? So I could take a risk questionnaire in the morning, and the sun could be out, the markets could be up, I could be having a great day, and I'm going to score higher or come out more aggressive. I could take that same questionnaire later in the afternoon, and I could be having a bad day, it could be raining out, the markets could be down, and I could score lower, come out more conservative. So again, we felt it was impossible just to score a risk questionnaire on preferences alone and try to match it to a portfolio. So we looked at all the other risk metrics out there, from capacity to constraints to probabilities, and we thought about scoring them all. But then we figured, okay, that's going to confuse not only the investor, but also take away from adding value on the advisor side, trying to explain all these risk metrics. So we narrowed it down to risk capacity. And the reason why we focus on risk capacity is, number one, if you look at the definition of risk tolerance, it is the willingness and ability to take risk, right? So risk preference covers the willingness, and risk capacity covers your ability to take risk. So that was our first kind of like, okay, number one, all these risk tools are missing the ability to take risk in their risk questionnaires. The second part, and the reason why we focus on risk capacity, is we found that on average annually, every person or household has one life event that impacts their overall investment objective. And that was more of our aha moment. As we dug deeper into risk capacity, we found that if you're more in line with your risk capacity, you're more in line with your financial goals. And also with risk capacity, it's based more on facts than feelings or behaviors. So with facts, we could pull in more information on the back end, and instead of asking a lot of questions on the front end, as well as the questions that we're asking on the front end, we could ask very simple, relatable questions and pull in more data on the back end to come up with that risk capacity score. So on this timeline, or risk bar, you can see that we score risk preference still to show the investor clients how much risk they're willing to take, but then we show and score the risk capacity to show them how much risk they can or should not take based on their life situation. And then separately, we score the portfolio with a different algorithm. And the whole idea is the portfolio should be in between the two risk scores, but really closer to risk capacity to be more in line with their financial goals. Now, these just look like numbers, less risk to more risk. But just to give you an idea, the S&P 500 index today is scoring around a 73, and the Barclays Aggregate Bond Index is scoring around a 15. So one of the really key areas of how we're better quantifying risk. Also on the back end, we're pulling a lot of data from multiple credible resources like the IRS, the US Census Bureau, the Cost of Living Index, the CDC, and more, to pull in data to assess that risk. So for instance, someone's zip code, we could pull in so much information on a zip code from cost of living in that zip code, median income, median real estate prices, cost of living overall, GDP. So there's a lot of data that we can pull in on the back end without having to ask any questions or more questions than what's your zip code on the front end. So again, a lot of data that we're updating, and it's really more of I would say, an active risk tool on the back end. So what are some of the key competitive advantages? Of course, the one thing that we saw in the industry is cost, right? Advisors spending a lot of money on their fintech stack. So we want to be able to add value with a quick return on investment. So the questionnaire alone starts at $349 a year. And again, that's a questionnaire with all the prospecting tools available there. And then for the full toolkit, that includes model marketplace, comparisons, analytics, and reports, as well as the investment policy statement and custom reports. It starts at $700 a year. So we also feel that that's a very attractive price point for financial advisors. Also, compliance. We feel that compliance is really important. When we spoke with the FINRA, we decided to go through a process, and we're on FINRA's compliance vendor directory on FINRA.org. Our reports are FINRA reviewed, and we've also worked with the SEC. Unfortunately, we can't use their quotes, but they've said that Totum is the most suitable risk tool that they've seen in the marketplace because we're scoring risk capacity separate from risk preference. They like 2 to 3 scores instead of just 1 score on preferences alone. They feel that wouldn't hold up so much in arbitration. They said this isn't bulletproof, but nothing really is. Client experience, we feel, is really important. I saw this on, I believe this is Fidelity, showed this in a presentation a few months ago. They put up on the board 89, 80, and 8. And I thought this was really important when it came to client experience, because the 89 was 89% of financial advisors believe client experience is important. 80% of the advisors feel that they are giving or providing a great client experience. And then only 8% of those clients feel that they're getting a great client experience from their advisors. So I think there's a little bit of a disconnect of what we're offering to the clients. And what we're trying to do at Totum is enhance that client experience by, number one, allowing the financial advisor to pre-populate a lot of the questions in the questionnaire to provide a simple, easy access to completing the questionnaire. Number two, we're asking very simple relative questions in a short questionnaire that's also mobile friendly. And we found that more than 70% of clients are opening up emails from their advisors and taking those risk questionnaires on their mobile phone. So again, enhancing that client experience. Also, custom proposals are really important to advisors, especially when it comes to the new SEC best interest rule. And we have a custom investment policy statement that's completely white labeled with your information as well as your own text. And I'll show you a little bit of that in a few minutes. Last thing that we added was a model marketplace. We had some feedback from our clients that so they would like to compare their models or compare an existing client's or prospect's portfolio to some other models outside of their own internally. So we added a model marketplace with outside asset managers such as BlackRock, Fidelity, BlackRock, Fidelity, State Street, SCI, and Franklin Templeton. So just a few areas there. And then one important area, of course, are integrations. So integrations in 2019, We've had Redtail for a few years, and we continue to enhance our integration with Redtail. Here's a few other integrations that we have, as well as what we're working on in 2020 for more integrations and complete workflow. So with that, I'll jump into the product. And when I first log in, I want to go to settings and set it up. So in profile, this is where I could add my company logo, my contact information, as well as the communication email. So for prospecting and business development, a lot of advisors use this. They could add the questionnaire to their website with the full questionnaire, which is 12 questions, or the mobile-friendly version, which is only 9 questions. Again, 70% or more of clients are using and clicking on emails on their mobile phones because they're active, and this mobile-friendly questionnaire is really helpful. You could add it to your website, to newsletters, to your signature page. We've seen it used all different ways from financial advisors and our clients. Custom reports I mentioned in here. This is where you could customize any investment policy statements, client summary, portfolio summary. We provide a template, so then you could just change the text if you want to, or add your own text. Same thing with disclosures and duties and responsibilities. Other important areas, model portfolios I mentioned. This is where advisors could create and add their own model portfolios. They could enter the information manually by entering the security, and that'll come up. We integrate with Morningstar and FactSet to pull in all account data and score it. So any securities all the way down to variable annuities, SITs, SMAs, corporate munis, treasury bonds, all that data is coming in here, so you could pull it up by CUSIP or ticker or name. You could also use the import feature with the template. So if you have 10, 20, 100 models, you could easily import all the models all at once. And then I also mentioned the model marketplace. So you could select any of these asset managers, see the models that they have, as well as the holdings, and then add those to your list. So again, over here on the left-hand side, you could select your user models, and then you could copy the model, you could edit the model, and then you could see each individual security. We score each security separately with its own algorithm. So iShares, you can see it's a 63, here's a 3-year track record. What we're looking at is data going back to the year 2000. So we want to see at least 2 market cycles, 2 interest rate periods. We also have inflation baked in there. We really haven't seen inflation since the 80s, but we also see that in our algorithm. In the algorithm, we're looking at the total daily returns of each individual security, and then we take the average of that plus the standard deviation of those returns, and then we multiply that by the square root of 252, which is 252 trading days in the calendar year, to come up with a more accurate score. For fixed income, of course, fixed income is a little bit different. So with fixed income, we're looking at everything from price, maturity, duration, convexity, Sinker calculator, wall. So a lot more goes into scoring fixed income, as it should, than your typical equity. And then for the overall portfolio, we just rebalance that on a quarterly basis. And if you want more information, we could provide more information to you on that. Also on our website under FAQ, we have a breakdown of how we're scoring it. We try to be as transparent as possible without giving away the secret sauce. Unfortunately, our website went down this morning due to using an old third-party vendor product that we continue to update on a monthly basis, but I think that company unfortunately went out of business, so we're switching it over quickly to AWS, Amazon Web Services, to get our website back up and running. So if you have any questions after this, you can reach out to us at contact@totumrisk.com. Again, that's contact@totumrisk.com. We also have an integration with iRebal, and we're adding other trading and rebalancing tools where you can just automatically pull in your models and also place trades. In the questionnaire, you have the ability to add your own custom questions. We don't score them, but if you want to find out more from a client or prospect, you can add as many questions as you like. And then integrations, of course, Redtail, a great partner that we've had. You can authenticate here to add Redtail, and you have 2 options. Number 1, we could pull in all of your account data from Redtail in a batch pull. So all your clients and all their accounts will show up in Totum. If I go to this tab up here, you'll see all your accounts listed here once you turn on that integration with Redtail. Or you have the ability to say, I just want to bring in client by client. So if I select Redtail, I could say, take me to the integration page. And then once I authenticate this again, and I select add client, when I hit add client here, it'll just ask me to add my client's first name and last name. And then it'll show that that client is available. You'll select add, and then it'll automatically pull in that client. So you could add in client by client, or you could pull all the clients in from Redtail. So that's the first step of our integration that we've done. First two steps we've done with Redtail for an integration, and we look to providing and enhancing that integration with Redtail to be able to, in the future, push and pull data back to Redtail. Once all your information is in Totum, you could go to a household list or individual client list, and you'll see all the names listed here, their portfolio value, and then their portfolio score. Once they take the questionnaire, they'll see risk preference and risk capacity score show up here. If I go into, let's say, Jody Summer, again, this is the advisor view. You'll see a few simple tabs over here, the portfolio, the questionnaire, the reports, and the audit. So in the portfolio tab, you could group clients' accounts. You could look at individual accounts. We score each account as well as the overall count. And then to get to the questionnaire, select the questionnaire tab. You'll see we timestamp and archive all the questionnaires, whether they're complete or incomplete for your records. You could download a quick template, or excuse me, a report of the questionnaire alone. You could also download a blank questionnaire for your client. And to send out the questionnaire to this client, you just select new. And you could select the full questionnaire or the mobile-friendly questionnaire. We'll select the mobile-friendly questionnaire. I could hit send. It'll automatically send them an email. I could copy the link to make it more personal, or I could even take the questionnaire with the client, whether it's on a Zoom call or in person. And then I could also go into the questionnaire and pre-populate as much information as possible, hit save, and then send this out to the client. And then they would just fill in a few questions that mainly around preferences and health. So again, white labeled with your information. This is the mobile version on a PC, of course. So age, zip code, family size, number of dependents, health, own property, right? Simple, easy, quick to fill out, and this is their personal information. So zip code I mentioned before, really important. This is, I believe, San Francisco, so we know the cost of living is high, real estate prices are high, et cetera. So the risk capacity in this situation would drop. But we also look at other data when we get to the finance section. So if they have a high net worth, low annual expenses, median to above average income, their risk capacity could stay the same or even go up. So again, a lot of data flowing in the back end. Also, a lot of products don't break out dependents. I have 2 kids, they're not free. They impact my investments every day. And also the IRS came out with a new rule last year that said, anyone that's living with you full time, other than the 2 heads of the household, are considered dependents, and there's tax breaks for that. Also, we have this health issue or the health question. We want everyone to be healthy, but if not, is it the head of the household, a dependent, or more than one person in the household? And that's more prevalent today than ever with the pandemic. But even before the pandemic, we added the health question because 80% of the wealth in the US is owned by the age group that's 55 and older. Unfortunately, that's when we start to have health issues. We also know healthcare costs continue to increase year over year. So again, very important part of assessing one's risk. And then annual income, pretty straightforward. Annual expenses, a lot of people don't know their annual expenses, so we have a little calculator here to help them complete that. And again, if you have this information, whether it's in a financial planning tool or in Redtail, in your CRM tool with Redtail, you can pre-populate a lot of this information and then hit save before you send it out to the client. Same thing with net worth, consistency of income, their investable amount with you, their time horizon. If it's not retirement, it could be a shorter time frame. And if it is retirement, they could select any age that they want to retire. The one question that most likely you'll have to leave open is they're investing $4.5 million. How much are they willing to lose over the next 12 months for future gains? As they scroll across here, they can see that dollar amount of how much they would be willing to lose. So, pre-pandemic, we saw numbers in the teens and 20s. Post-pandemic, we've seen very low numbers. So we'll say 10%. And then what sectors do they work in? Whether it's finance, technology, we also have retirement. So if they select retirement, retire and move on. But what we're looking at here is, are they in a cyclical or defensive sector? And are they tied to one of the top 3 sectors in that zip code? So if I'm in telecom and I work in and I live in Silicon Valley, our concern is, or not telecom, but technology, that my that if technology takes a dive for some reason, hopefully it wouldn't, but most likely it won't, we're concerned about them losing their increase in pay year over year, or bonus, or possibly even losing their job. So then from here, the advisor could select save and then go back and then send that back out to the client. Otherwise, if they hit next and submit, they'll see that the spread here is pretty wide, which is what we've been seeing more and more recently, with the risk preferences being a lot lower than they were during the bull market when they were up in the 60s, 70s, and 80s. But this client or prospect, their risk is, how much risk they're willing to take, is a 28. Based on their life situation, they could take on a lot more risk, up to a 77. Their current portfolio is a 41, so they are in between the 2 risk scores, which is fine. But most likely, they probably want to be a little bit closer to risk capacity. Number 1, because they'll be more in line with their financial goals, and number 2, it's more of a static number. So in what we've seen over the past, say 6 months, is a lot of the risk preference scores that were in that 60s, 70s, and 80s are now scoring in that the 20s and 30s, and some in the teens, because of the volatility in the market, even with the bounce back. Once they hit submit here, then that information goes back to you, the advisor. You'll see that it's timestamped and archived over here on the left, as well as you'll receive an email that they complete the questionnaire, as well as an alert that they completed the questionnaire here. The other alert would be as if the portfolio drifted outside the risk band. So if this portfolio goes to 27 or up to a 78, they'll see that impact their overall alerts. So they'll be sent to you. Back to the portfolio, you could select any accounts or all accounts, and then you have the ability to compare. So compare side by side any of your models that you've added, or any of the asset manager models. So if it just shows the S&P 500, you can see 12-month potential gain loss, as well as the underlying holdings. So again, if this is a model, you could also run some quick analytics, historical simulation, scatter plot, and return simulation, the Monte Carlo. From here, you could change the time frame, customize the time frame, run some stress testing with the global financial crisis, as well as compare to any of your models or indexes. So you can compare these side by side. Any of this information you could export to a report to share with the client. Whether that's a client summary, portfolio summary, or investment policy statement, the majority of advisors use the IPS. Out of the 3 main areas in our product, of course, is the questionnaire is number 1, widely used. Number 2 is the investment policy statement. Number 3 is the model marketplace. So within the IPS here, again, you can preview the document before you export it to PDF. On the left-hand side, if I didn't want to show return simulation or the scatter plot, I just turn it off. If I don't want to show holdings, I only want to show asset classes, I could do that. If I want to show a comparison to make some recommendations, I could come in here and select any of my models. So if I want to get something closer to, say, let's not use BlackRock, we'll use Fidelity's 77, might be a little bit high, or even this ETF model. And let's move this so I don't close out. And I could preview the document here on the right-hand side before I export it to PDF. So again, white labeled with your information, your client's information. The welcome page, again, your own text. Risk profile, the outcome, their question and answer, their current portfolio, option 1 that you're recommending, current portfolio, option 2 that you're recommending, as well as the asset classes. Paint the picture for the client. Maybe they're a little bit too volatile. I want to go to something a little bit less stress. Duties and responsibilities with the signature page, and then disclosures. So again, making it quick and easy. The last few things I want to touch on. You may go through this process, then go through a financial plan, look at some information in Redtail, and realize that this client needs to take on more risk or less risk than what Totum is telling us here. So for instance, if Jody needed to take on a lot more risk or a lot less risk based on information that we found, that she's buying a house, close to retirement, really didn't want to take on that much risk, really concerned about markets, really wants to go pretty much into cash, we can move this over. And if we do move that risk preference, it'll show that we moved it from a 28 to a 17. Please explain why. We'll type in our notes, went through financial plan, looked at some information in our CRM, and realized that Jody needs to take on a lot less risk. Once I save that, it'll save it at the new number, as well as audit. Under the audit tab, it'll show that we timestamped and archived the move, the score change, as well as your comments. And you'll also see that on the investment policy statement as well if there was a change. And then the last thing I want to just cover here real quick is analytics back on the home page. Break down your book of business, but in the analytics tab, this shows a scatter plot of all of your clients by the risk capacity score, risk preference, portfolio score, and age. The whole idea is to make sure there's no outliers, right? So if I have Smith Barney that has a portfolio score of 92, we want to see why these two clients are scoring higher in their portfolio. Same thing here if somebody has a higher risk capacity, but more importantly, if I have portfolio scores of 0, these are most likely prospects, and I may want to reach out to them and add their portfolios to Totum, which I could easily do back in the portfolio section. So again, just a quick high-level overview of Totum and our integration with Redtail. So if you have any more questions, if you would like to schedule a demo, please feel free to reach out to us at contact@totumrisk.com. Again, our pricing starts at, if you do monthly, $79 a month or $700 annually. And anyone that was on this webinar today will offer an additional $10 off the monthly subscription or $100 off the annual subscription of $700. Again, just contact us and let us know that you were on the webinar, and we'll be happy to offer a free trial as well for 7 days. And again, thank you for your time, and we'll open it up to Q&A at this time.
Thanks so much for joining us today for this particular session. If you have any questions, please don't hesitate to give us a call at 800-206-5030, option 3 for support, or just shoot us an email over to support@redtailtechnology.com. Thanks a lot and have a great day.